The 5th of May 2018, the first quarter of calendar year 2018, 1Q2018, recorded investments worth $7.9 billion across 180 deals, a record performance for the private equity and venture capital sector, led by large deals. In the infrastructure and real estate sectors, the PE/VC investment activity eclipsed the previous first quarter high of $4.6 billion seen in 2008 by 72%, according to a report by A. Continuing the momentum from last year, the record performance was led by large deals in the infrastructure and real estate sectors. Also, financial services continued to be the top sector, receiving $2.9 billion in investments across 31 deals. Further to the trend established last year, large value deals over $100 million continued to dominate the activity. The reporting quarter recorded $1.8 billion in exits, 10% lower than 1Q2017, worth $2 billion, 61 exits, and 51% lower compared with 4Q2017, $3.7 billion, 64 exits, according to EY's private equity monthly deal tracker. PE/VC investment activity is clearly on a high. 1Q2018 has been the strongest first quarter in recent years, and we believe this year will be strong across all asset classes of PE, infrastructure and real estate. Exits in 1Q2018 have been muted compared with 4Q2017, largely on account of volatility in the capital markets. However, there are strong undercurrents of M. If they materialize and capital markets hold fort, PE/VC exits in 2018 should end on a good note, said Vivek Soni, partner and leader for private equity advisory at A. Investments in infrastructure and real estate by PE/VC funds in 1Q2018 were more than 50% of the amount invested in these asset classes in the whole of 2017. Besides these large investments into infrastructure and real estate, quarterly PE/VC investments have taken a dip in 1Q2018, closing at $4.8 billion after $5.6 billion in 4Q2017. However, on a year-on-year basis, 1Q2018 remains the best first quarter for PE/VC investments even after setting aside these large investments in infrastructure and real estate. There were 13 deals of value greater than $100 million made in 1Q2018, aggregating to $5.7 billion and accounting for 72% of total investments made in 1Q2018, 6 of which were into infrastructure and real estate, worth almost $2.7 billion. 4Q2017 and 1Q2017 had 17 and 6 deals greater than $100 million, respectively, it added. The largest deal during the quarter saw GIC, KKR and others invest $1.7 billion into HDFC Limited, the largest private investment in public equity, PIPE, investment since Temasek invested about $2 billion in Bharti Airtel in 2007. The first quarter also recorded the first-ever investment by India's sovereign wealth fund National Investment and Infrastructure Fund, NIIF, with Hindustan Infralog Private Limited, a joint venture between NIIF and DP World, buying a 90% stake in Continental Warehousing Corporation, and Havashiva Limited for $400 million. The first quarter also recorded the largest PE/VC investment in the Indian infrastructure asset class, with Macquarie purchasing tolling rights to 648 kilometers of national highways from the NHAI for $1.5 billion. This is India's first toll operate transfer (TOT) project and is also one of the largest foreign investments in the Indian public infrastructure. In terms of stage of investment, the buyouts category received the largest share of investments, 34%, $2.7 billion across 12 deals, primarily on account of the large Macquarie TOT deal. Out of the 12 buyout deals, 6 were in the infrastructure and real estate sectors, worth $2.3 billion. Excluding infrastructure and real estate investments, PIPE category, $2 billion, received the largest share of PE/VC investment. In terms of volume, startup, early-stage investing recorded the highest number of deals, 82 deals, accounting for almost 46% of the total deals in 1Q2018. Notwithstanding the large investments in infrastructure and real estate, carrying forward the trend seen in 2017, the financial services sector garnered the highest share of PE/VC investment in 1Q2018, with $2.9 billion invested across 31 deals, the highest quarterly investment into the sector. In 2017 was a record year for financial services with investments worth $7.2 billion. From a monthly perspective, March recorded $3 billion in deal value, an increase of 14% compared with $2.6 billion recorded in March 2017. This growth was primarily driven by some large investments into the infrastructure and real estate sectors. Excluding these asset classes, VC investments in 2018 have recorded a declining trend, with $951 million recorded in March compared to $1.2 billion in February and $2.7 billion in January. Exits in 1Q 2018 were marred by volatility in the global capital markets, which were rattled by fears of a trade war between US and China. 1Q 2018 recorded $1.8 billion in exits, 10% lower than 1Q 2017 and 51% lower compared with 4Q 2017. Exits via strategic sale were the highest in terms of value, $597 million, while in terms of number of deals, exits via open market operations were the highest, 20 deals. There were 4 VC-backed IPOs in 1Q 2018, wherein VC funds garnered $172 million via offer for sale. IFC and GIC's $125 million exit from Bundan Bank Limited was the largest exit via an IPO by a VC fund in 1Q 2018. Fundraising activity in 1Q 2018 remained strong, with funds worth $1.3 billion raised, on par with funds raised in 1Q 2017. Moreover, fundraise plans announced stood at $10.3 billion, a sign of strong fundraising activity to follow as the year progresses.